Hi everyone, welcome back to my channel. Today we are going to solve A-level accounting specimen paper 3 question number 2. 2A. State 2 reasons why a business may have non-current liabilities even though it also has substantial retained earnings. Retained earnings are not the same as cash. Retained earning as earnings are not same as cash. The business may have invested in other assets also. The business may have invested other assets also. Next, they are given the additional information and we can check the question. Question number 2B. Prepare statement of changes in equity for the year ended 31st December 2020. Specimen paper 3, you will get insert and question paper. So we have to follow the source document in insert. So here I have just copy pasted the source B for question number 2. ZPLC has the following balances. This is the insert. So we have to prepare our statement of changes in equity. Statement of changes in equity means it shows the changes in the equity or in the capital. They are given one working space. So first you draw statement of changes in equity. ZPLC statement of changes in equity for the year ended 31st December 2020. Here I already have drew one statement of changes in equity. So here clearly said make the total column is required. Total column you must draw the total column. So ordinary share, share capital, share premium, general reserve, retained earning and total column. Then we have given amount are the big amount, so we put in thousands. So we can make it short. So let's see the question. First, statement of changes in equity means we start with the opening balance of capital and we get the closing balance of capital. So opening balance is at January 2020, ordinary share capital, general reserve, retained earning and debenture. So here we will not take the debenture. Only the capital thing only we take. So ordinary share, general reserve and retained earning only we put in the statement of changes in equity. So the first item at 1st January 2020. So ordinary share capital 500,000, premium not given the premium. Then what they are given in the question? General reserve and retained earning. Debenture is not the part of ordinary share capital. So premium not given. General reserve 40,000 and retained earning 460,000. The total is 500 plus 40 plus 460,000. Next, one by one we can do. During the year, long-term bank loan we will not enter in the statement of changes in equity. This is not the equity part. Next, an interim ordinary dividend 0.06 per share was paid on all issued shares at January 2020. So, next is dividend. Ordinary dividend. Ordinary dividend. So, dividend is 0.06 per share. So, here the share capital is 500,000. So, how many share? 500,000 divided by share price. Share price is 2. So, we have 250,000 share multiply what is the dividend 0.06 is equal to 15,000. So dividend paid 15,000. Dividend will pay from the retained earning. So we deduct from retained earning 15. So total is minus 15,000. Next, the taxation charge will not take the tax now. Next, for 200,000 shares were issued at a premium of 0.75. 200,000 shares. What is the share price? Share price is given. The company's share price is 2. So, share issued 200,000 multiply 2 is the share. Then 200,000 multiply 0.75 is the premium. So, 200,000 into 2 is equal to 400,000. Then 200,000 into 0.75 premium. 0.75 means 150,000. So share is 400,000, premium is 150,000. Issue of share. Issue of share. Share is 400,000 and dividend is premium is 150. Total is 400 plus 150, 550,000. Next, the profit from operation 105,000. Profit from operation 105,000. So we have to write the retained earning, the profit for the year. This is profit from operation. So we have to calculate the profit after interest and tax. Here the profit is 105,000 minus interest. Interest is given 4% of 400,000. 400,000 multiply 4% is equal to 16,000. That is one interest. So we deduct 105,000 minus 16,000 minus long-term loan interest 14,000 minus tax. Tax is 10,000 is the tax. So profit from operation is equal to 65,000. Profit for the year. Profit for the year is equal to 65,000. We will add with retained earning 65. So the total of this 65. Next 5 is done. Next 6. A transfer to general reserve 25,000. Transfer to general reserve means some amount is transferring from general reserve from retained earning. From retained earning to general reserve. So 25,000 is the we are transferring. So 25,000 will deduct from retained earning, add to general reserve. So transfer to general reserve. Transfer to general reserve 25,000. So we take 25 from retained earning and add to general reserve. So our total column will be 0. Next 7th one. A final dividend of 0.08 per share was proposed on all issue of shares at 2020. This is the proposed dividend, so it will not give any changes in the statement of changes in equity. We will not take. Now we have to calculate the total, and that is our closing capital. So total is at 31st December 2020 or closing capital balance at 31st December 2020. So make the total of each column. The first column 900, second column total 150, 65, 485. So total capital is 1,600,000. So statement of changes in equity, we are done. Hope all are clear. If you have any doubt, please put in the comment box. Next, 2C. 2C. Calculate 2 decimal places the gearing ratio of ZPLC at 31st December 2020. So, we have to write the gearing ratio equation. Gearing ratio is equal to, what is the equation of gearing ratio? Non-current liability divided by non-current liability plus equity into 100. So, non-current liability. What is our non-current liability? How much is the non-current liability? Non-current liability is given in the question. We have first bank loan 250,000. Then they are given debenture 400,000. So 400 plus 250. How much? 400,000 plus 250,000. 400 plus 250,000 is 650,000. Non-current liability is 650,000. 50,000 divided by non-current liabilities plus equity. So 650,000 plus what is the equity? Equity here we are calculated the equity. Total equity is 1600,000. So plus 1600,000 into 100 is equal to 28.89%. So next, calculate interest cover ratio of ZPLC. What is the equation to interest cover ratio? Profit from operation divided by interest on capital. Profit from operation divided by interest on capital is equal to profit from operation given in the question. How much is the profit from operation? The fifth one, profit from operation 105,000. So profit from operation is 105,000 divided by what is the interest? Interest, we have two types of interest they are given. Bank loan interest. Bank loan interest is 14,000 plus debenture interest 4%. Debenture interest 4% already we calculated 16,000. So 14,000 plus 16,000. 14,000 plus 16,000. 16,000. The answer is, how much is the answer? 3.5 times. Next, they are given the additional information. The business had issued the shares and taken out the bank loan in order to finance an extension to the factory. At the annual general meeting, one shareholder stated that rather than issuing shares, the company should have financed the extension entirely by taking out long-term bank loan. They are saying the company should have financed the extension entirely by taking bank loan instead of shares. Calculate 2 decimal places the revised gearing ratio if the shareholders' proposal had been adopted. So first we have to find the revised gearing ratio. So if they are business issuing the shares, what will be the gearing ratio? Let's see. So non-current liability already, you know the equation of gearing ratio already we done. Non-current liability divided by, we are done here. Non-current liability divided by non-current liability plus equity. How much it was? 650,000 650,000. And if they are issuing the shares, so we have to find the revised one. Issue shares, what was the total of issue shares? Issue of share, the total was 500 50,000. So 650,000 plus 550,000 divided by non-current asset, non-current liability plus equity. Non-current liability plus equity is equal to 650,000 plus 1600,000. That is 2250 multiply 100. So the revised one is 53.33%. Before it was how much? Only 28.89. Now that is 53.33% more. Gearing ratio is more. So next question. D2. Advise the directors whether or not they should agree with the shareholder. Justify your answer. They should agree or no. So the answer you have to give agree, that if you are agreeing or disagreeing you have to write. If you agree you have to write the agreeing point and disagreeing point. If you are disagree also you have to write the point and give the decision. So advise the directors whether or not they should agree with the shareholders. So here first we can write the disagree point. Gearing ratio has increased, it making the company more risky. Gearing ratio has increased, it making the company more risky. Next, the increase in risk might have to lead to high rate of interest on loan. The increased risk is the increase in risk might have led to a high rate of interest on loan. The company need to generate enough cash flow. The company need to generate enough cash flow to pay the loan interest and everything, right? The company need to generate enough cash flow to repay the loans. While the share issue will have led to dilution of control. The issue will have led to dilution of control. Issue of shares may result in a lower dividend per share. So the company should agree with the shareholder. So the company should agree with the shareholder. Company agree with the shareholder, because although the loan interest has to be paid, there is no requirement to pay a dividend. Although the interest need to be paid, no need the dividend, right? No need to pay dividend. Next, state the two factors a bank might considering when a business applies for a loan. Business liability is limited or unlimited? It is limited. So what the bank might consider when the business applies a loan? The business ability to pay the interest and the profitability of the business, their cash flow, then their balance sheet or statement of financial position, etc. So we can write any two. The business ability to pay interest, they are able to pay the interest or no? Ability to pay interest. Next, the profitability of the business. If their profitability is good, they will be able to pay the interest, right? The profitability of the business. So, A-level accounting specimen paper, question number 2 we have solved. So, tomorrow we will be uploading the question number 3. If you have any doubt in this solution, please put in the comment box. And also, if you are not subscribed to my channel yet, please subscribe and support. Thank you.